Welcome to the second video in a three-part series about trading in financial markets. In the first video, I talked about the order book and the bid-ask spread. If you haven't seen that video, you can find a link in the description. In this video, I'm going to talk about how to read charts, particularly the candlestick chart. So let's get to that. Here's a candlestick chart. But before we talk about the candlestick chart, let me show you another type of chart. A very basic chart that's probably going to be straightforward to you. That's just a basic line chart. So this is a chart of Google, Alphabet Inc., which is the parent company of Google. This is the past year of the price of Alphabet Inc. Each point on this chart represents one day. And you connect those dots for each day, and it shows you this line chart that shows you the price history of this stock over the past year. But what that doesn't tell you is like what happened in the middle of the day. It just gives you one price per day. So it doesn't tell you how it started the day. It doesn't tell you what happened in the middle of the day. And that's where the candlestick chart comes in. So a candlestick chart, the reason they call it a candlestick chart is because each little point or section of it looks like this. It looks like a candlestick. So here's like a candle here with the wick. So it looks like a candle. But it represents 4 different price points per period. Whereas the line point for like a day just shows 1 price per day. This shows 4 prices. So it will tell you what it started at during the day, that's the open, what it ended at during the day, that's the close, what the low during the day was, and what the high during the day was. So let's say a given stock starts at $5 right here. Let's say it starts right here at the open. That means it started here at the open, and it went up somehow. Well, let's start down because this is an up candle. So it went from 5, let's say, down to 4. So that means the low was 4. But from there it bounced up and it went all the way up to 6. Or let's say 7. So this would be 7. But then it ended the day, went down a little, and it ended up at 6. So now we have 5 here was the open, 6 here was the close, but 7 was the high, and 4 was the low. So it gives you all those price points. Whereas a line chart, a line chart would just give you the closing price, 6. You don't know where it opened, you don't know what the high was, you don't know what the low was. But a candlestick chart gives you all of those. And it also gives you the direction, because if it goes from open to close, then it gives you this green candlestick. But if it's the opposite, let's say it started at 6 but ended at 5. That would be the opposite. It went down for the day. That would give you, well, in this example, pink, but it's usually more reddish. A red candlestick. So it tells you at a glance whether the price went up during that period or down. So I've been just using day as a period, but you can adjust the period based on whatever you want to. You can zoom in, zoom out, have different longer time periods, shorter, whatever. But the basic idea is the same. During a given time period, what did it open at, what did it close at, what was the high, and what was the low? That's what it shows in one. So now let's string them all together and let's show you a real live example. This is Bitcoin. I'm sticking with day here, but you can also change to like hour. So now each candlestick represents 1 hour. You can change to even 1 minute. This represents, see how it's a little sparse now, because that's only one, each candlestick is representing 1 minute. But let's go back to just sticking with 1 day. And let's zoom in so we can get a better view of each of the candlesticks. So now we're zooming in, and each of these represents just 1 day. So that's maybe like a month or so of price history, with each candlestick representing 1 day. So for example, here, we can look right at a glance. This was a big day. It started really low and went really high. And the low of the low was basically the start. So this was basically just an up day all day. It went pretty high and then it ended up right here. And one thing you'll notice about candlesticks is usually the previous close is going to be the same as or very close to the new open. So if you notice here, see this point here matches up to here, because it went up and then it closed here, but then the next one opens up at that same price or close to it. That's what you're going to see on most candlesticks, but theoretically it isn't necessarily the case, because between one trade and another the price could jump pretty radically. It just most of the time it's going to stay pretty stable. So going the other way, this went up, so see how this matches up right here, but then it went down here. So it went from here to here and went up again, up again, up again, down a little bit. And then that matches up there and went up again. Okay, last thing I haven't mentioned yet is volume. That's these little bars down here at the bottom. So volume tells you how much of that given, the quantity, the amount of that given asset that was traded in that time period. So in this, remember this represents days. So this day where it went really high, we had really high volume. We had, I don't know how you can zoom into the actual number of the volume, but relative to the other days, the volume was really high that day. So basically that's what these little bars at the bottom are telling you. It's the volume of what was traded, or how many was traded of that asset during that time period. So that's usually found right at the bottom. So there we go. That's how to read the basics of how to read candlestick charts. Thanks for watching.